Welcome back, folks. Right now, you have the Dow Industrials trading. Come on, baby. Get up there. Trading up 110. NASDAQ up 47. S&P's up 14.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day. 12 to 1 Eastern Standard Time. Also a great newsletter, the opening call. Now, the way you get the opening call, folks, you come over to TFNN. You're going to go to newsletters. You're going to see the opening call right there. You hit view the opening call. You can just hit subscribe. And $128 per month for 1 month. For 6 months, it's only $5.95, which is a savings of $173 or 22%. For a year, it's $9.95, which is a savings of $541 or 35%. They all come with a 30-day money-back guarantee, folks. Check it out right at TFNN, right under newsletters. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. Yourself?
Very good. Thank you.
Good. So, what a little volatility, a little market that likes to jump around 20 or 30 S&P points per tweet. Pretty cool.
We've seen a lot of that lately, but the big breakout that really took the Dow above 26,800 with that gap up, that made a difference. And now what we're looking at is, if you look at my left side chart of the Dow, I'll just show this for a moment for those who are new to my work right here. So in the Chapman Wave, I think there are really, for me, there are three patterns we look at. It's either straight up or straight down, or it is the arch formation or the cup formation. So that's 1, 2, and 3, or you can get a mix. And the mix in this red one shows you there's a straight line down and then an arch formation. If the left side low is taken out, you can keep going lower. And the inversion of this H pattern, which is like a Y upside down, you've got the Y showing you that if the left side high is taken out, you can keep going higher. And essentially, we're just looking at 4 higher peaks. I alphabetized the notation. So each higher peak is a letter, A, B, C, D. That fourth highest peak is where other things can happen. Could go higher to even E, F, and G. But D is where we're always looking to see, take a foot off the accelerator, hover over the brake, because things can turn. You saw the Dow on the 16th of July turned around at 27,398, right at a peak D. Now we're back in a leg D, just what it says, the high today so far is 27,306. So we are, 92 points away from an all-time high. So we're really close. The MACD, the moving average, is good. And the stochastic is flat at 98%. And that's suggesting that there's a lot of support in any pullback and that there's still some upside pressure to come. So I'm looking at a potential of a new high coming. But what is interesting is that the weekly chart, the technicals are not that great. And it is, as I say, just within 100 points of an all-time high. So this V-shaped pattern that we're looking at, how the Dow treats the 27,400 is going to be really important going into next week, certainly by Monday or so. But if we go to 27,398 points, it makes a difference of 0.01. So if it's 27,398.69, we've begun a monthly leg D. So this is actually quite an important moment, because about 3 weeks ago, certainly 2 weeks ago, I was mentioning to subscribers that we want to be looking at the deep cyclicals, because I think that there's a chance that they were beaten, the United Technologies, Triple M, Caterpillar. It seemed to me that they were really, they took a drubbing on the way down, and that they were ready both as dividend stocks and as potential deep cyclicals, certainly industrials. Those are the real industrials ready to turn up. So we actually have Caterpillar. Caterpillar is doing very nicely. Right here, let me show you. It's got that same cup formation. It's only in a leg B right now. We're in at 122. Yesterday it hit 130, 133. What was that? 133.19. It's down just a little bit today. It's at 131.70. This is looking quite interesting. And as I say, it's the laggards that are starting to move. And if you look at the real winners, and I made a big deal about this, is that the FANG type stocks, Apple's actually the closest to its high. But look, Amazon should be way higher, and it's just stuck in the doldrums down here. It's not breaking down, it's not breaking up, it's just kind of stuck. So I think what I've said to subscribers is we want to be very selective, which is what we've been doing. We're up about 20% on our bank stock. The stock that I spoke to you about, it's an ETF, an ETF, which is the iShares Broker Dealer and Security Index. This ETF, we're in at 60. It hit 66 the other day. It's trading at 66.09 right now. And I'd said way back last fall, I said if this particular ETF signaling, I think it would signal the kind of depth of market participation by regular people. If that hits the 67s and then pulls back to the 63, 61 area, and then starts to rally again, that next rally is going to be really important. Well, we hit 66 back in July. We pulled back to 61 in this last move down to August. We're now back at 66. And I really do believe that if this can start to trade in the 69s, it'll raise the base of support. But I think it's also going to tell me that the public is finally going to be in the market and be able to actually talk about being in the market. This is, I still call this the biggest mega bull stealth market. You just, wherever you go, nobody's talking to you about, nobody talks to me, even at the tennis courts. Very few people mention the stock market. And I mean, 5, 6 years ago, that's all they were talking about, and they're not doing it now. So I think that, for me, it's just a bellwether. So this is the type of thing that we're trying to go under the radar. And so far, it seems to be working. So,
well, what's interesting, what you're saying too, Basil, is that it's possible that there's so many more folks right now that are into ETF indices versus individual stocks. Like
the SPY, which actually made a new high today, but the S&P hasn't done it.
Right.
And, and I think that many people are in the indices but they're not doing the stock stuff. They just, you have to talk about it. I mean, there are no kind of sexy stocks that are like,
No, like in the past. No, I get what you're saying. I agree. I know, there's no doubt. And that's where this whole ETF structure has changed the business. There's no doubt.
It has absolutely changed the business. So people are in the market. But it's, as I say, it's a silent participation. Not only that, I'm going to say it again, it's not probably a politically correct thing to do, but I think that if people start talking about the stock market in a way other people will think they're implying that this is talking politics, and nobody wants to talk politics, so people are just saying, hey, I'm not going to even discuss it. I'm being nice to you.
That's a good point. Yeah, no, I can see that. Yeah.
So I think it's a really, you spoke about the TLT. TLT had a fantastic move, and then every bit of media, every minute of the day, they were talking about the inversion, the yield inversion. They were talking about lowest rates and 0% bonds around the world. But actually, if you look at it, this is a big pullback from 148 in the, we'll call it 149 in the TLT down to the 139 level. But there is still the need of governments around the world to be funding all the things that they're funding. And that's the reason why the demand that they are putting on to actually push out their bonds, I think that's what's creating the low yields. That's going to force us to keep our yields low.
No doubt. Listen, folks, the way to get Basil's newsletter, come over to our website at TFNN. You're going to newsletter, see the opening call. Great newsletter. Check it out right here, right now. Basil, we look forward to the program tomorrow.